Good afternoon, guys. Hope everybody's well. Hope you had a good weekend. We are up and running on the week, and again a pretty bullish Monday morning. It seems to be the theme of these markets recently. We always seem to get on the front foot at the beginning of the week, and this morning is definitely the same as that. And there's one overriding reason for this, and really the main story for the financial markets over the weekend, and well, particularly this morning, is the Dubai situation. I've got a 2-hour chart here actually, so I'm just looking at the whole month of December. And before I talk about what happened which created this spike higher overnight, just looking at the medium term, we got up to the high of the year for the March contract at 11.17. That was on non-farms Friday, on the 3rd of December, and then since then we've struggled for upside because of the strengthening dollar. And we've kind of had a couple of dips, and last week the first half of the week was particularly bearish, followed by a turning point midweek where we hit a low at 1080.50, and we've rallied back, and we've now retraced pretty much all of those losses. And the story has been really since that non-farm Friday, we've had nothing but sensational economic data, starting with that non-farm payrolls result, which was so much better than expected. 11,000, minus 11,000 rather than the expected minus 125,000. Of course, the unemployment rate also dropped from 10.2 to 10. I mean, staggering numbers. And since then, we've backed that up with even more positive data. So last week we had both wholesale inventories and business inventories turning positive for the first time in over 12 months. And then on Friday we had retail sales and we had consumer sentiment both coming in much better than expected. So the economic data since that non-farm payrolls numbers have been amazing, and have indicated that the US economy is recovering at a faster pace than we had thought. And because of that, we've had strengthening dollar, and that has really provided a bit of resistance, upside resistance for stocks, as that inverse dollar stocks correlation, unwinds, and until that kind of gets out of the system, stocks will struggle to make significant gains. But we're back up. Having said that, the dollar is much stronger against all other currencies, and yet stocks are still pretty much, as you can see, up at the highs of the year. And actually also, in the face of this, the oil price has been moving massively in the opposite direction. Let me bring up an oil chart here. Since mid-October, oil's been in a downtrend. You can see this channel that I'm monitoring here, and it broke out of the downtrend. This little correction lower down to $72 was the Dubai, when the Dubai news first hit, but that was retraced pretty quickly. But since then we have crashed through the bottom of this trend channel, and oil it's pretty much in free fall. And there's an amazing statistic that's come to light this morning, and as you can see from my chart here, we've had 1, 2, 3, 4, 5, 6, 7, 8. We've had 8 down days in a row, and today we're down again, so potentially a 9th. And the last time the oil price dropped on 8 consecutive days was over 6 years ago, which is quite a staggering statistic. But there we go. We're currently on 9 down days in a row if we close around the levels we're trading now at 69.25. So the lower today is actually at 60. It's only just above 68, $68.20. So oil is in free fall, mainly due to the fact that the dollar is strengthening, and also because inventory levels have been rising. So oil's definitely, it's not only been trending lower for quite a while, it's actually now really accelerated towards the downside. 65.05 is a major support level. That was the low on the 25th of September, so we'll be looking out for that. Should this trend continue, that's certainly a significant support level at 65.05. Okay, so stocks have been very resilient, because not only have we had a falling oil price, but we've also had a strengthening dollar, and because of correlations that are in place, this provides headwind for stocks when they're trying to move to the upside. So resilience in stocks does demonstrate the fact these correlations are unwinding, and it does demonstrate the fact that we have had some amazing economic data recently. And this morning we're on the front foot, we're bullish again, and around about, if I go to the 15-minute chart here, you can see quite clearly the spike. So at 4:15 a.m. this morning, we moved from basically 1100 and we spiked higher up to 1113, so that's 4 points underneath the March 14-month high at 1117. Okay, so really quick move here, and the news is that Abu Dhabi have provided $10 billion to help Dubai World, the state-owned holding company. So $10 billion to help them avoid defaulting on a $4.1 billion bond repayment that, of course, created a bit of a whirlwind of nervousness in the markets a couple of weeks back. A lot of negative sentiment was injected into the marketplace, and we saw some pretty big moves down. And actually, the stock markets, the day after this news broke, the stock markets had their biggest down day since April. So Abu Dhabi stepping in with $10 billion. So Dubai World will use this money to cover debt of real estate unit Nakheel PJSC. So they've got this $4.1 billion bond repayment today. So they're going to use $4.1 billion to pay that off today, and the remainder of the money will go to cover Dubai World's interest and operating costs until the company reaches a standstill agreement with its creditors. So this news broke at 4:15 this morning, and obviously stocks spiked off this. I mean, this all comes after the Emirates and its state-controlled companies borrowed $80 billion to diversify away from dwindling oil supplies, and Dubai have actually been forced to seek Abu Dhabi's help 3 times this year now, as the global financial crisis dried up credit and triggered a property crash. So, Dubai have gone back, cap in hand to Abu Dhabi, and again they've stumped up some cash. So for now, that kind of removes the risk that's been associated with this situation for the last couple of weeks. So that's good news for stocks. It creates, the nervousness, any lingering nervousness that was still out there kind of gets removed now. And in the bigger picture, it's not going to have an impact on global recovery, whether Dubai gets into trouble or not. Okay, but the stock markets don't always view it like that. Stock market has a very short-term memory, and it just likes positive news, even though it may not be that significant. Arguably, the retracement we saw the second half of last week was effectively saying, look, we're not that concerned about Dubai in terms of global economic recovery. That's why the market retraced the losses that we'd seen a couple of weeks back. But with that news breaking, there's still upside. There's still that short-term reaction that markets always show. So that's what we saw this morning, up to 1113. Then we've drifted lower, and we've hit what is the Amplify trading entry point, 1107.25. That's the R1 resistance from the pivot points. So for now, that seems to have done the job for support. We're reasonably bullish. Well, not bullish, we're neutral to long today. There's no economic data at all, so it might be a pretty quiet day. And on quiet days with no economic data, and recently we've seen the market